Welcome to the Tear Sheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tear Sheet's editor-in-chief, Zach Miller. Most banks seem to chase small business customers as one segment among many. Live Oak Bank was built around a bet that specializing beats generalizing. And it started about as narrow as a bank can start, lending only to veterinarians. The FDIC jokingly nicknamed it the doggy bank. Today, Live Oak has grown that thesis into 40 verticals, holds the top spot among all SBA lenders by dollar volume, and has done it all without a single branch. My guest today is BJ Losch, president of Live Oak Bank. Live Oak has never had a physical location, yet its people travel the country to sit across the table from customers a branch down the street never would. Now the bank is layering AI onto that model, cutting loan approval to close timelines from over 100 days toward a 2-week target, and thinking hard about what it means to stay high touch while going high tech. We talk about the theory of verticality, where automation should and shouldn't touch the credit decision, and why BJ sees AI as an accelerant of Live Oak's strategy rather than the strategy itself. Here's my conversation with BJ. Great. So who are you and what do you do?
I'm BJ Losch. I'm president of Live Oak Bank.
Welcome to the Tear Sheet Podcast, BJ.
Great. Thanks, Zach. Great to be here.
It's awesome to have you. And I feel like you're number one SBA lender. We should have been talking a lot more over the past couple of years, but maybe talk about the backstory about how that came to be.
It's a fascinating one. Our founders founded the company in May of 2008. And if you remember what was going on back then, it was quite a
scary times.
Quite a time. And so, it was great to actually start it back then because we really didn't have anything, too substantial as we went into the financial crisis. But it was interesting. It was founded as a SBA lender, making loans to veterinarians only. The reason it was to veterinarians only is the founders had done a lot of research and saw that veterinarians were most likely to pay the bank back, which is really important to a bank. As a matter of fact, in the financial crisis when it started, the head of the FDIC nicknamed Live Oak the doggy bank because of where we started. And so that's how we started and made it through all of those rocky times back then and 40 verticals later and, lots and lots of growth, here we are.
And is that, I know that, as you mentioned, that verticalization is an important part of the strategy. Is it solely a creditworthiness approach, or are there also different tools and different support you provide to different verticals?
Yeah. So we have always had what we call the theory of verticality.
Mm-hmm.
And what we try to do is, instead of being a community bank that might be more generalist and lend to everybody, we want to be specialists and really understand customer relationships, what they're going through. So in the early days, we actually had veterinarians on staff. We had dentists on staff. We had funeral home directors on staff to really, really understand how a small business could thrive or not in that particular vertical. And we've always stayed true to that because we believe going deeper and actually adding value to customers more than just giving them money. Money is green. They can get a loan from any bank, but we give them a lot more value because of our expertise than they can otherwise get elsewhere.
Can you give an example, I guess, where that focus on a specific vertical would give a customer something different?
So usually a veterinarian, if you think about it, might just walk into their local branch.
Mm-hmm.
And they might want to open up a deposit account. They might want to get some working capital funding. But generally, they're going in and talking to the branch representative or branch manager who may or may not know anything about veterinarians, but they know about banking products. We know about veterinarians. What we bring to the table is we can show them a 100-day plan. We can show them what other veterinarians have done to be successful, whether it's buying equipment, whether it's, practice management software, whether it's, collections, all types of things like that, that go well beyond just the loan or just the deposit account. And we follow up with them regularly. We constantly get feedback from our customers that say, "I can't believe that you traveled across the country from Wilmington, North Carolina to come visit me at least once or twice a year. My branch down the street has never even been in my office."
Don't even
And
get a
that
toaster anymore. Yeah.
Yeah, exactly. So that's the kind of value that we try to provide. We don't have branches, but we do get our people out in the field and we go see customers face to face.
So it sounds like that's very much at like the advice layer, at the relationship layer. Does that also manifest itself in the technology as well?
Absolutely. We have a saying around here that speed is our weapon. And what that means is we want to get back to the customer quickly and answer the two questions that customers care most about. Am I approved? And when do I get my money? That's it. And because we have, for the majority of our life as a company, been singularly focused on small businesses and SBA lending, we continue to hone that over and over and over and over with people and with technology to make it faster. So today, a typical SBA loan might take 100 to 120 days to get done. We're at about 40. We want to get that down to 2 weeks. So we are constantly iterating with technology, with process to be able to do that for customers.
So this high tech, high touch approach that you guys have, obviously we're in a renaissance period of automation and AI and stuff like that. How do you manage a trade off between the touch and the tech? Meaning, like, is there a place where automation isn't appropriate and it requires a real human being to step in and have that real relationship that you described before?
We think credit is and creditworthiness
Hmm.
and understanding the borrower and their behavior is always going to have a human element to it. If you think about the deposit side, we have a very successful online deposit platform, but that can be disintermediated away by
Hmm.
price, by technology. It's really hard to differentiate online. But as a regulated institution, which all banks are, the regulators want to know that you are actually looking at these credits. So yes, we will be able to automate more and more of the document ingestion, the tax returns and the bank statements and all those types of things that we have to use to underwrite a loan. AI will actually be able to help us spread those financials and actually build the credit memo, which is what we're using AI today for already. But actually making that decision, we want people looking at that because that is our most important currency, if you will, trust. Trust from our people and our customers that we know what we're doing. We're not going to put them in a bad situation. And then trust from those that oversee us, like bank regulators, that we're taking care of our balance sheet. And then, of course, the SBA, because they guarantee 75% of all the SBA loans that we make.
It's an interesting dynamic because what we're talking about is technology uh, automating big parts of the process, the credit approval process, and you're describing a customer who really just cares about speed, about when the decision is going to be made and when they're going to get their money, and yet the human still plays a big element in it. That creates, I guess, the environment of trust, I guess, that enables the transaction to happen. Do you see that evolving longer term? Well, you mentioned always having a human in the loop, but I guess my question is, are there other things within the technology process approximating humanness or whatever that is that could replace? I agree with you. We will always need trust in financial transactions, but I'm just wondering if that has to come from a human down the road.
Again, I think on the lending side, there's
Hmm.
going to be more human interaction. Will it become less and less? Probably. Will the human interaction turns more towards value, advice, understanding customer needs, et cetera. Yes. Even with that said, AI will still be able to do a lot of that as well. So, I think what we're trying to do here is skate to where the puck's going in 5 years. What do small business owners have today at their disposal in terms of AI and AI models that they use personally? What are they going to use in their business 6 months from now, 12 months from now, 3 years from now? And how do we evolve how we do business and what is going to provide value to them at that point? There's a saying, if you come to our campus here in North Carolina, it's all over. Treat every customer like the only customer. That is our number one mantra that we all walk around with. And if you think about, pre-AI, that was a pretty aspirational thing to try to do for tens of thousands of customers. I think with AI, we will literally be able to treat every customer like the only customer. And if we're focused more singularly than others, particularly in the banking industry, I think that we're going to have very unique success.
And what does that look like internally at Live Oak? How are you approaching the same tools and the same automations for your staff?
So again, we're pretty forward leaning in terms of company and our background. We're an SBA lender, but we've always had a spirit of innovation. We have our own ventures portfolio. We've invested a lot in fintech. Our founders have literally incubated and spun off very successful fintechs here. So, we're always on the cutting edge. So we very quickly adopted AI models and democratized them to all 1,100 of our employees. They all got to start playing with those. We're now in the process of creating more super users and providing them more institutional support to get things done easier and faster. It's been interesting to me to watch AI, the revolution that's going on today. And really, to really think about it, the frontier models made a step change leap only back in February and March. So really, this is still from a business perspective, for sure, very, very new. And so what I've seen with our use of AI is our people have dove in. We've built agents. We've automated credit memos. We've automated dashboards. We're looking at fraud analysis, all kinds of different things. What I've also noticed, though, is that using AI and just using it as building blocks on existing architecture or workflows maybe makes us twice as productive as we used to be before.
Mm-hmm.
But I want to be 10 times productive. And to do that, I think that we're going to have to look at AI and AI nativity, to use a popular term, across workflows and treat it like a massive transformation program. Or, back in my prior life, I used to do a lot of mergers and acquisitions at the companies I used to work for. And a merger integration involved communication, putting cultures together, worrying about people, timelines, products, which system should we use, which processes should we take, all those types of things. I think to truly unlock the power of AI, companies are going to have to do that and reinvent themselves. And that's really not that easy.
Yeah, it's hard enough to do a digital transformation, right? But this is getting at the guts of everything. And I joke that we haven't had a guest on this program over the past 2 years where AI hasn't been central to our conversation. Clearly, we're trying to figure this all out. I would like to switch gears a little bit and talk to you a little bit about the venture portfolio that you mentioned before, how that fits into the strategy at Live Oak and maybe some of the types of investments you've made.
Sure. So again, if you look at the founders and what our founders had done before, Chip Mahan is our founder, still our CEO. In 1995, he put the first bank on the internet. literally. Security First Network Bank.
Wow.
He then sold it 3 years later and turned that into a software company called S1 Technology. So he's very, very much on the cutting edge. And here, when we started Live Oak, the process for getting an SBA loan approved has tons of documentation. There's a 550-page document that you have to follow to the letter to make sure that the SBA will accept it. They built a platform that is now spun off, and it's a public company leader globally in the industry for loan origination called nCino that was incubated right here at Live Oak. Those were really kind of the impetus for then continuing to have a ventures portfolio. And our primary focus of the now 14 investments that we have are technologies that we think that we can use inside the bank, either to make ourselves more efficient or, more importantly, to help customers with issues that they have that we can help solve. And also, obviously, secondarily to us, have gains that we could get as these companies grow and prosper.
I guess from a technology standpoint, you mentioned in the beginning of our call about, that you guys have, I guess, brought down open to close in like a 40-day period. Is that the number you used? Yeah.
Approval to close. Yep.
Yeah. What does it take, I guess, to get it down to 2 weeks? What is the real hump in terms of understanding that process? Is it a technology issue? Is it a process issue? Is it something in your control? I'm just curious to unpack that.
Some's in our control and some isn't. We are co-designing a platform right now with a company called Casca, which you are very familiar with, that is trying to change the way that end-to-end loan origination is done, starting with SBA and then going to all kinds of different lending platforms. They are coding, as you might imagine, in AI native platforms, and we're iterating that to be able to move faster. So we think that we can take a ton of the friction out of the process, but we're also always going to be dependent on what the customer can get to us in terms of documents. That's the biggest friction point. And so what we're working on is how to take that friction out, how to make it so easy for customers to give us access to connectors and MCPs and
Basically aggregate all the
APIs to
stuff
be able
together.
to aggregate it, and we can just go out and grab it for them. They don't have to go and look in their files. That is probably the hardest part of getting a loan is these customers collecting all these documents. So we're constantly iterating to try to do that, and we think Casca can help us a lot on that journey.
Awesome. And in the 10 years that you guys have been at this, at Live Oak, has your end customer evolved in the sense, have their needs and desires evolved, or is it still just needing the money as quickly as possible? Like, has an SMB customer had their desires and wants actually evolved based on what's happened outside of the banking industry even?
Yes. I mean, I think for any of us that have competitors, more and more data, more and more information, more and more threats to the business are occurring, whether they're, internal or external. And so we have seen that evolve. And we've also evolved as a company. Like we talked about, we started just making loans to a certain vertical. Now we have 40. We just, for most of our life until a couple years ago, believe it or not, as a bank, did not offer a checking account. What bank have you ever heard that didn't offer a checking account? And it's because we really didn't need it. We focused on the lending side. But obviously, small business customers need operating accounts and help on that side. So we have introduced that as well. The interesting thing about our addressable market is we are the number one SBA lender. We've been the number one SBA lender for several years, but we only have 1/4 of 1% market share of small businesses with 5 million in revenues and below, 0.25%. So our opportunity is massive, and we believe that they're currently underserved by either the community banks or the biggest banks. There isn't really a lot of banks that are focused specifically on small businesses. There are fintechs that are trying to do that as well, but again, they're a little bit more narrowly focused, we believe, on certain pieces of the business, and we want to create a unique platform and customer experience that, like I said, literally treats every customer like the only customer.
So I guess as we get to the back end of our conversation, maybe that's a great segue into, one of the last conversations we have is what will it take to get there, to get a more significant market share amongst SBA clients? Is that a distribution issue? Is that a product issue? I guess I'd love to hear it from you. Well, what's the next stage for Live Oak? Where are you guys headed?
We believe it's both product
Mm-hmm.
and distribution.
Okay.
And so that's why we're building everything that we are, and we think AI can really accelerate that. I think what's really exciting about how we're doing how we're building our business is, and this is a huge differentiator, we believe, between us and some others. AI is going to be an accelerant of our strategy, but not the strategy itself. And
I cringe when people talk about it being the strategy. AI is just a tool. I don't understand how it can be a strategy, but I totally agree with what you're saying. Yeah.
Yeah, absolutely. And so, but I do think that people are pursuing it as a
Mm-hmm.
strategy to make themselves more efficient or more productive and grow profitability that way. But we just think that over time, AI is going to be ubiquitous. And whether it's 12 months, whether it's 24, 36, who knows? The productivity aspect of it is going to be available to everyone. So we're trying to build a business model for small business and commercial customers that uses that technology to accelerate what we're already good at and provide more distribution points and, frankly, create a platform where they say, why would I go anywhere else? Easy to say, very hard to deliver. And so we understand that. So what we're trying to do is play to our strengths and hold two different competing thoughts in our mind at the same time. We talk a lot every day to our 1,100 employees. Hey, keep the main thing the main thing. Do a great job with customer service, make good loans, gather deposits. But on the other end of the spectrum, we are constantly thinking about where are our competitors going, fintechs, banks, what's evolving, how can we use it, what's going to make us successful in 3 years is not what makes us successful today. And so how do we reconcile that for the benefit of all that depend on us?
BJ, it's been a pleasure talking to you today. Thanks for joining us on the Tear Sheet Podcast.
You as well, Zach. Thanks so much. Have a good day.